Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest stock market news updates that you need to know of as an investor. Remember to go and smash that like button right now for more videos just like this one, subscribe if you are new, and with all of that being said, I say let's get right into today's stories. We see that the general stock market is performing quite well, with the Nasdaq and the S&P 500 up quite a bit. We also see Bitcoin up to date as well as Nvidia, and we're going to talk more about Nvidia a little later in this video as we discover the latest new AI stocks that you need to be aware of. But before we do that, let's talk quickly about Apple. Apple is a huge technology company, and their saga continues regarding Apple's Series 9 and Ultra 2 watches. If you didn't know, these watches were banned from being sold in various areas. A US trade court found the watches violated another company's blood oxygen monitoring technology patent, and this did not go well for Apple, because ultimately this led Apple to stop selling their models of these watches briefly before stepping up its legal battle. Now, it is worth noting that the company recently said in a court filing that Apple did make changes to their watches, including the removal of their blood oxygen sensor. So now, since Apple is no longer infringing on another company's patent, they are allowed to sell their watches again, or at least these variations of their watches. So at the end of the day, Apple is no longer subject to the import ban on their smart watches, which is a pretty big win for Apple. We also see another development in the news where Kroger said its purchase of rival supermarket chain Albertsons will take longer to close due to regulators prying into their deal. So that is a pretty interesting development as well, but let's return to the crux of this video, which is artificial intelligence stocks. Nvidia has continued to climb in their price this year, soaring more than 240% since last year. But Nvidia is not the only major artificial intelligence stock that is winning right now. We see companies such as Coherent, NXP Semiconductors, Western Digital, and Camtek taking over the market. An investment analyst even said that we think investor focus has already shifted to 2025 to where we are rolling out numbers across our coverage and assuming a robust positive inflection for most end markets. He goes on to say, even factoring in a strong growth year in 2025, there isn't a ton of low-hanging fruit at these levels. With this said, we are picking our spots into next year and prefer names leveraged to the second wave of AI. Barclays also commented very positively and released bullish statements on AMD as well as Marvell Technology. But let's talk about Coherent. Barclays raised their rating for this company from an equal weight rating to an overweight rating, and they also increased their price prediction for this company, which started at $38 and it's now at $60. So this was a huge upgrade. But what about NXP Semiconductors? What's going on with them? Well, they also saw a stock price target increase from $200 up to $260, which again is another huge improvement that investors should be aware of. We also saw Barclays increase their price predictions for Western Digital as well as Camtek, to where they also raised their rating and price predictions. Originally, they raised them to an overweight rating and an equal weight rating, and they also increased their price targets from $65 to $82 and $45 to $65 respectively. So again, these are very large upgrades in not only price predictions, but also price targets for these companies. So I would highly encourage you to look into these artificial intelligence plays because they got major upgrades recently. We also saw other analysts assemble their top 10 stocks to buy right now, which would consist of the following. It would be Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta Platforms, Berkshire Hathaway, Tesla, Eli Lilly, as well as Visa. And honestly, I am a huge fan of these top 10 picks, even though I would make minor adjustments, but overall, this is a very fundamentally solid list. So if you are a newer investor, or if you haven't invested over the last 5 years, then I would highly recommend you looking into these companies. We also see a plethora of companies moving wildly today, both up and down. So let's talk about the biggest stock gainers recently. Shares of the engineering software company Ansys recently experienced a 5% surge as the design software maker named Synopsys finalized terms to acquire this company in a $35 billion deal. And we're going to talk more about this story in our next article. We also see Carrols Restaurant Group, whose shares have surged by 12% recently after another acquisition by Restaurant Brands International valued at $1 billion. So it seems that acquisitions really tend to increase the share price of various companies and, of course, their stock price. We also see the stock price surge for Digital World Acquisition Corporation, ticker symbol DWAC, after Trump recently had a huge victory in Iowa to where the share price surged by over 10%. And if you didn't know, Trump has many ties to Digital World Acquisition Corporation, and that's why his victory over in Iowa decided to lift the stock price of this SPAC. We also see Zim, ticker symbol ZIM, and their shares increased by 6.2% following an attack on Gibraltar Eagle off the coast of Yemen. And those would be the winners for today, but what about the biggest losers? Well, we see Boeing shares falling around 3% as a Wells Fargo analyst downgraded the company to an equal weight rating from an overweight rating, citing increased risk for them achieving deliveries for their overall goals this year. We also see Morgan Stanley, ticker symbol MS, and their shares declined by more than 3% following the release of mixed Q4 results. We also see shares of electric vehicle manufacturers over in China, such as NIO, Li Auto, and XPeng, falling today. But why is that? The primary reason for a downtrend in these companies' share prices is because European regulators are trying to add additional tariffs on these Chinese automakers. And as a result of this, their share prices have decreased. XPeng's share price was down 6%, Li Auto's share price was down 5%, and NIO's share price was around 2% down today. We also saw Baidu, ticker symbol BIDU, falling approximately 5% on Tuesday, despite a Citi analyst suggesting that the market may have overreacted to news reported recently on January 12th, linking the use of the company's AI platform Ernie by a research laboratory affiliated with the Chinese military. And this spooked investors, and that's why they decided to sell off this company. Unsurprisingly, we also have Elon Musk and Tesla in the news today regarding artificial intelligence. Tesla's CEO, who is Elon Musk, warned on Monday that he will need to secure greater control of Tesla if the company's wide-reaching AI ambitions are going to be met. He even posted on X by saying, quote, "I am uncomfortable growing Tesla to be a leader in artificial intelligence and robotics without having 25% voting control. Enough to be influential, but not so much that I can't be overturned. Unless that is the case, I would prefer to build products outside of Tesla," end quote. Essentially, Elon Musk is warning that he could separate the AI and robotics segment of Tesla into its own company, especially if he doesn't have around 25% voting control. If you didn't know, Tesla has very ambitious artificial intelligence goals because the company is focusing on using its Dojo supercomputer to train its AI model that powers its full self-driving software. They also have many other initiatives, which we will talk about a little later in this article. I think this would be a huge mistake on Elon Musk's part if he separated artificial intelligence from Tesla, because Tesla's AI and supercomputer products could be a huge success for Tesla in general. And honestly, I don't think investors would take this lightly, and I think the share price of Tesla would plummet further downwards. To quote Daniel Ives from Wedbush, who is a very prominent Tesla bull, he says, and I quote, "It's no secret and a key to our bullish thesis that all AI initiatives be kept within Tesla, from Dojo to Optimus to full self-driving to various robotaxi and other robotic developments," end quote. Essentially, Daniel Ives says their overall price targets and bullish momentum that they have in Tesla is due to Tesla in totality and not just a particular segment. This means that if Elon Musk were to cut Tesla into various segments and have another full company which will do artificial intelligence stuff and Tesla just do automotive stuff and energy storage and generation, this could be catastrophic for their overall share price. Daniel Ives also said, and I quote, "The street views Tesla correctly in our view as a disruptive technology leader, and if Musk ultimately went down the path to create his own company separate from Tesla for his next generation AI projects, this could clearly be a big negative for the Tesla story." And to be quite frank with you, I completely agree with Daniel Ives here. The other big issue stemming from this that this author correctly points out is Elon Musk asking for more shares, which is a negative outward appearance and perception to investors as a CEO demanding more control of the company. And this means that the CEO may just want to do what he wants to do without taking into consideration the interests of shareholders. Now, I don't really see a big problem with this necessarily with Elon Musk, because normally his ideas are in line with what investors want. And also, he only wants 25% or approximately 25% voting rights. However, IVE did comment about this as well by saying, dilution and shareholder approval is a process that must be carefully managed and this will not happen overnight. So he says that it's essentially good for shareholders to have a lot of voting rights and not for the CEO just to manhandle the company to go into the direction that they want it to. But I would love to hear your thoughts down below in the comment section about this story and whether or not you think Elon Musk should create a separate company for his artificial intelligence projects. Like we said earlier, Synopsys is buying Ansys for $35 billion. To quote straight from the Ansys CEO, he says, and I quote, "This transformative combination brings together each company's highly complementary capabilities to meet the evolving needs of today's engineers and give them unprecedented insight into the performance of their products." Essentially, the companies are saying that their business complement one another and that this acquisition will enhance both companies, especially in regards to automotive, aerospace, and the industrial spaces in the market. If you didn't know, Ansys is heavily involved in the automotive, aerospace, and defense spaces, as well as construction, energy materials, and chemical processing. And if you didn't know, some of the biggest customers for Synopsys would include AMD, which is Advanced Micro Devices, as well as Intel. You should also be aware that these companies have a long history together. The two companies have literally been working together closely for around 7 years, to where the Synopsys CEO even called them a partnership well before this acquisition even happened. But it still needs approval from Ansys shareholders to officially come through to fruition. If this deal were to happen, it would be amazing for the company's share price. Because if you didn't know, we also saw Cadence and Siemens also trying to bid for Ansys, but they got beat out by Synopsys. An Oppenheimer analyst even wrote that once this acquisition is fully realized, the stock price of the company could go as high as $400 per share after this takeover. So clearly investors would want to get into this company now before they become a mega cap company. However, it's not all good news considering that DuPont was recently downgraded. DuPont, ticker symbol DD, was recently downgraded to an underperform rating from their original buy rating from analysts at Bank of America. Bank of America said that the reason for this rating downgrade is due to the chemical maker being overvalued right now, especially when we take into consideration the risks that are associated with their legal battles. An analyst at Bank of America said, quote, "We hear a broadly held view that DuPont liabilities have been addressed, which ignores the potential for significant personal injury litigation based on our due diligence in crop chemical litigation." Essentially, because DuPont is a chemical maker, they are known for producing PFASs, which are known as forever chemicals because they don't easily break down in the environment or in animal tissue once ingested. This also causes extremely bad side effects in both the environment and nature around them, as well as if any people ever ingest these forever chemicals. DuPont is regularly involved in legal battles, which does not reflect positively on this company. And if you recall, last summer, they were among some of the chemical makers that reached a proposed settlement of a class action legal lawsuit regarding their forever chemicals, which had polluted some public water supplies, which is really bad for this company. Now, despite this, they actually got a price target increase from $78 up to $80, but for me, I would avoid this company at least temporarily until these legal battles end up being resolved. Now, on a more positive note, we saw that Starbucks landed a bullish rating from Morgan Stanley, so let's talk about it. Starbucks, ticker symbol SBUX, which is a coffee chain, recently got upgraded by Morgan Stanley. And the rating upgrade bumped Starbucks' SBUX stock up from an equal weight rating to an overweight rating, which is very positive. And even if we look at Seeking Alpha's quant rating system on SBUX, they are a buy right now, and I completely agree. I think Starbucks is a phenomenal company to hold in your portfolio. So I love seeing this bullish momentum surrounding this company, and I'd love to hear your thoughts down below about this. We also saw Marathon Digital complete purchases of 2 Bitcoin mining sites, which is very cool. Marathon Digital Holdings, ticker symbol MARA, ticker name Mara, closed its previously announced acquisition of 2 Bitcoin mining sites. Essentially, this company is an indirect cryptocurrency play where they have a load of miners and these giant sites that mine Bitcoin and other cryptocurrencies. Marathon's mining portfolio is now absolutely massive, to where they own 45% of the machines on their sites, and they also have 55% of other machines on their site, which are hosted by third parties. But either way, Marathon is making a lot of money from this. We even heard their chief financial officer say, "We look forward to realizing the synergies from this transaction, including the anticipated reduction in our Bitcoin production costs as we begin incorporating these new assets in our operations," end quote. So if you want a cryptocurrency play without directly buying Bitcoin through a Bitcoin ETF, and you actually want to hold stock in a company, then this company could be the one for you. Speaking about Bitcoin, as you know, the SEC approved 11 spot Bitcoin ETFs, which are known as exchange-traded funds. And this was a huge win for both investors and the companies which own these ETFs, as well as Bitcoin itself. $4.6 billion worth of Bitcoin ETF shares were exchanged on the day they were released, with Grayscale setting a record for the highest trading volume ever for an ETF's first day. Due to rising competition, we also saw BlackRock and Fidelity, who want to compete with Grayscale, lower their overall fees, so more people will trade their ETFs. And likewise, the competition from Bitwise, ARK Invest, and 21 Shares have also had spot Bitcoin ETFs approved, and they are offering promo fees of 0%. So I would love to hear your thoughts down below about this, and what do you think about the chances of an Ethereum ETF eventually being launched? I would love to hear your thoughts about that. But lastly, let's close out the video talking about if you think the stock market will collapse in 2024 or not, and personally, I just do not see that happening. I think we are going to have a phenomenal year in 2024, especially as interest rates start to tick downwards, but I would love to hear your thoughts. Go ahead and annihilate that like button right now, subscribe if you are new, go ahead and become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.